Let's
Yep.
jump right into the market. S&P 500, here we are in an uptrend, higher high, higher low. You got a little red candle there, Matt, which indicates some selling pressure. But with a weekend of news with a $50 billion tariff on China, then China came back and put tariffs on the US, and you could have seen some selling and really not a lot going on here.
Market is not pricing in fear right now. It's really technically driven right now. Last week, 2 weeks ago in the market, we were expecting it to break out of the high base. It did. It came up into that 2,800 level where we anticipated it coming into, based on the old previous high at 2,800. It's also a significant whole number. And last week, Tim, when me and Noah were looking at the Skyline, both of us felt like it was a little bit overextended. Nothing crazy, just a little bit overextended. It already ran a little bit, and we should see some consolidation, if not come right back down into the support line. Into the support line. I see this forming another high base type situation, similar to this one right here. However, I really like a breakout of 2,800 from a technical perspective.
Mhm.
You can certainly trade it between 2,750 and 2,800. There's no doubt about that. But I would give that a coin flip situation, Tim. I would give it 50-50 if it comes back down to support or goes back up to 2,800. I mean, if you're looking at that support level between 2,740 and 2,750, and you're currently at 2,775 with resistance at 2,800, you're literally smack dab in the middle of support and resistance. You're seeing a little bit of a fade action coming back down into support, but no real big selling pressure. The volume on the sell wasn't anything to be too concerned about. This is just kind of the market saying, you know what, Trump, little crazy coming out there speaking all these tariffs and these 50 billion here and 25 billion there, and Trudeau's this and Kim Jong-un's that, and the market doesn't know how to behave in that environment. There's some uncertainty, and usually the market does sell on uncertainty. But we've had some fairly good economic news recently. We had a fairly decent news week from an economic perspective last week. We're expecting quite a bit of economic activity this week when we have building permits on Tuesday, and housing starts on Tuesday, and then you have Fed Chairman Powell give a speech on Wednesday, existing home sales. So we got our home week this week. We got our building permits, housing starts, existing home sales. We got a couple manufacturing, and then the big one is coming later this week, and I'm sure we'll talk about it when we have discuss crude. It's the OPEC meetings on Friday and Saturday of this week that should have an impact, especially on the commodity and the currency market. But outside of that, in the equity market, looking at the S&P 500, I think it's kind of a stay away from a directional situation right now until we see some clear direction. And I'd be a buyer off a support bounce at 2,500, and I'd be a buyer after a resistance breakout of 2,800.
The market is above those two moving averages that you have. The 20 and the 50 are two of the most popular simple moving averages in the market. I know there's 15 or 20 of them out there, but those are really key. As long as prices stay above those lines, I'm going to stay somewhat bullish. But in the short term for this week, 27.75 on this exact print right now. Man, 25 points up, 25 points down seems like a coin flip. Who knows?
It's a crapshoot. It's
neutral for the week until we get confirmation on direction. Let's go on to volatility. And by the way, neutral is good for theta. Definitely.
Absolutely.
You can play. And volatility index is now sitting down here at a low point, Matt, 12.65. We're in a very interesting situation because volatility is the kind of thing that, as a new investor out there, as an experienced investor out there, it doesn't matter who you are, I think you can get value by looking at the volatility index. I know that you can because it's the insurance market. Now, what you do with it, that requires sophistication. Now, here we are at a low point, Matt. Going into July, I tend to believe volatility should pick up in the market, implied volatility, to be very specific, because of earnings season coming up.
Yeah.
What's a strategy you can play that is neutral on the market but bullish on volatility?
Well, there's a couple things you could do, especially coming into earnings season. If volatility right now is at very, very low price, it's 12.64 on volatility, which for this year, that's pretty low for this year. It wasn't low for 2017, but it is low for 2018. So options are priced to buy right now. And you could certainly go out there and swing trade, some call options, and you can go out there and swing trade some put options and so on and so forth. And you should be getting a fairly good price on the options. However, with earnings coming up, we do expect volatility to rise coming into earnings, as it always does. We expect implied volatility to rise coming into earnings. It always does. Take a couple stocks here. Looking at Tesla here. Tesla's been on an absolute tear. Tesla has earnings coming up in about 6 weeks from here.
Mhm.
Volatility kind of at the low point here, the same way volatility was at a low point coming in before this earnings. And as volatility rises, the value of options rise. So I think with volatility at that low price, and looking at the VIX at volatility at the low price, I think a great way to play volatility at the low price is a straddle or a strangle. You to play some type of bidirectional position. Volatility is at a low. You capture the volatility as it's leading into earnings. I think that's a very simple and wonderful way to play volatility, being at the low range and also taking advantage of bidirection, making money on the top side or making money on the bottom side.
One of the very most important things I do look at is volatility index. Even though it doesn't always tell me exactly what to do, it kind of points you in the direction of certain strategies. I like the straddle strangle as a specialty technique right now. Very interesting call on that. Let's go into the crude oil market, Matt. If there's been one thing, and really all the markets are moving, the S&P, the stock market is probably the most boring out of all of them. Crude oil
Yeah.
took it on the chin in May.
Mm-hmm.
Little rally, bear rally, and then boom, took it on the chin again here. Nasty, nasty red candle on Friday, coming back with a very strong green candle here today. When the candles get bigger, but everything comes below the moving averages, Matt, you've got the potential for some movement either direction here. What's your take on crude?
I'm a little concerned with crude, especially coming up later this week with OPEC meeting on day one and day two. We had the Russian news come, Russia and Saudi Arabia agreeing to increase supply to offset, the regulations that are going to be coming in Iran. That kind of was back here where it initially drove crude all the way back down, and then it just sees this fade action. I'm still looking at this very important support level trend line, and it just, as it tried to get back up above that, it tried to also get back up above its moving averages. Couldn't do it, got beat up coming into at the end of the last week. Snapback rally, but that snapback rally, I'm not a buyer at these levels. I'm still very, very concerned about the crude market right now, especially in the light of the news coming up later this week. I will tell you though that the weekly chart does show some potential buying information. You're looking at it kind of slowing down. So if you look at this on a weekly chart, it is slowing down to the point where you might see a potential buying opportunity, but that's still underneath that very, very important trend line, Tim. If I go ahead and clear my drawing sets and I draw the trend line on the weekly chart and I connect all these dots right here, you're still underneath that very, very important trend line. So I'm a little concerned right now with the crude oil market. I'm very concerned on the short-term volatility that crude could represent this week on the weekly chart. I'm a little, concerned, but it still looks like a potential buying opportunity. I just don't think you can play anything strong one way or the other on crude right now, because it would not surprise me in any capacity to see this rise and show strength coming up back up above the moving averages, or it get utterly pounded coming into the end of the week with those OPEC meetings. So I think for most traders, this is kind of a stay away week from a directional perspective. Obviously, as a trader, you might have a bigger arsenal where you could go to different strategies, but for new traders, I think this is a stay away.
Crude's the kind of chart that's got like a short skirt and a long jacket. And you just made me think of Cake, the band. I'm sorry. I had to bring
Yeah,
up a
there you
reference.
go.
A little
There
bit
you go.
concerned. I follow them on social media. They're one of my favorite bands from the 90s growing up. It will date me for sure, but I love Cake. If you've never heard them, go check them out. Crude oil, volatile, and obviously the commodity markets are going to be as volatile, as they're going to be when the dollar is doing what it's doing. Before we go into the currency, though, let's check the gold chart, because this is one you talk about being a little bit concerned. I'm a heck of a lot concerned about gold. I think gold has got some real pressure here. We're breaking below support, nasty red candlesticks. You're below all of your moving averages. You have all kinds of stuff going on from a geopolitical perspective, Matt, where you would think gold would be a safe haven, and it has just not been that in 2018. With those nasty candlesticks, how do you play this here? How do you read this? How do you interpret what's happening?
Well, in looking at this, I come back to what we've been talking about for a very long time. That $1,300 level is so very, very important for gold. And once it gets underneath that, back here, once it got underneath that, you were bearish. And if you're a long-term investor in gold, you probably should have insured it to see, to just take the risk out of the equation. Gets absolutely butchered on the 15th coming into today on the 18th, showing a little bit of slowing momentum. I do have support right here between 1280 and about 1290 is where I have support in that type of range. For a very long time, though, I felt like gold was going to depreciate into this range down here between 1240 and 1260. And with the price action last Friday coming into it, the bearish trend coming into it, I certainly feel like that's going to be hit again. Nothing has changed that equation. And if you wanted to short gold under 1280, I would not. You would have no argument out of me.
Yeah. Volatility is to be expected. There's no doubt about it because of so much going on in the currency markets. And, we understand commodities relationship with currency, that inverse natural relationship, but really just the movement as well. I mean, when the dollar is going crazy, the commodities will go crazy as well. And the dollar had a big event last week. It initially tried to sell off. Makes me think of the old strategy we've used for a long time, that news-based trade in Forex. It initially tried to sell off in the first few candlesticks. Then it found some support and just took off. The hawkish comments out of the Fed are being interpreted very clearly. The market believes him. The market believes Jerome Powell. They believe what's going on with the Fed. They believe in the interest rate hikes. And you're seeing it in the dollar here.
What have we said for months? Jerome Powell, take him in his word until he lies to us.
Yeah.
And he's been more hawkish than Yellen has. He's definitely more hawkish than Bernanke is, or was. He's been true to his word. He's been very consistent. Whether you like him, whether you don't, whether you're a fan of the Fed or you're not, everybody knows where I, kind of lay in that discussion. But you have to take the Fed for the word until they lie to us. And Jerome Powell has been very straightforward. They said they were going to raise rates last week. They raised rates last week, but it wasn't the rate hike. And that's the one thing a lot of people have to understand. It's that rate hike. Everybody anticipated that rate hike. That rate hike was not on this day, Tim. That rate hike was on this day. And so it was this small red candle that kind of sold off initially, but then the speeches coming out of the Fed and speeches specifically out of Jerome Powell. And we have another very important speech coming on Wednesday from Jerome Powell. That was a hawkish speech. Now
not only that, the European Central Bank came out and Mario Draghi said that they're canceling the asset purchasing program. And so the euro got crushed on that day as well.
Which is definitely going to drive the dollar up. There's no doubt about that. From a technical perspective, Tim, I'm looking at this very, very important level of $95 now. It's hit it on that very bullish day. It drilled 95. It's held up at 95. 95 was the old resistance level over here. But if you look at the head and shoulders formation before we came into this year, it was starting to show a little bit of weakness here at that $95 level. It then showed the head and shoulders, then drove the price of the dollar back down. Now you have that $95 level being hit right there. If $95 is broken, you should see another trend form coming into that 96, 97, 98, 98 level. I don't want to get anything crazy and we might go to pair again like we were looking at on the euro back in 14 and 15, but the dollar is starting to show tremendous strength, and especially with weakness in oil, weakness in silver, weakness in gold, and a hawkish Fed, that's going to lead to a bullish dollar.
I was thinking about this on the other side of the argument. Is bullish dollar good or bad for the equity markets? I don't know. I do know this is that in perspective, $95 on the dollar index is still a lot lower than where it was, years ago.
Oh, yeah.
And so companies still have very favorable purchasing power with their dollars right now.
I wouldn't say that the strength of the dollar won't impact exporting that much until you get up above 100 on the dollar index.
Sure.
If you get above 100 on the dollar index, other currencies are getting crushed, and the importing exporting relationship between their currencies versus ours becomes more difficult, and so that could happen. If you'll remember back in 2014, 2015, 2016. And if you allow me just a moment in time to kind of show you those dates here. So if we go back to when the dollar was just going up like gangbusters. I mean, if I look at this from a 5-year, 10-year perspective, right? And that's always good to get some perspective. If you look back here to 2014, it was just flying up in value. And then coming into 2016, punching up above 103. At that point, what did we see about for every company, S&P 500 company, Dow company, tech company? You saw in almost every earnings report, they would blame the lack of revenue on the strength of the dollar, is what they would blame it on.
Mm-hmm. Mm-hmm.
But it was really helpful to your small and mid cap stocks who don't deal with a lot of dollar to euro relationships or dollar to yen relationships or dollar to rupee relationships. They deal with dollar to dollar, so it doesn't impact companies that just do business here in the U.S. as much as it does impact people that do business internationally. So it certainly had a big impact on that. But if you look at that, Tim, I know we've seen some strength over the course of the last 6-7 weeks. There's no doubt about that. But if you look at the historical context, we're still underneath a lot of these very important resistance levels. I'm just looking at this level right here at 95, and I don't see anything in terms of a technical resistance level until you get somewhere between 97 and 100. So if that level at 95 is broken, you should see a 2-3-4% increase in value in the dollar, which could be very, very important for traders as they look to potentially go long on the dollar against the euro, especially in light of getting paid a higher interest rate on the dollar versus the euro, a higher interest rate on the dollar versus the yen, a higher interest rate on the dollar versus the pound, a higher interest rate on the dollar versus the Canadian. So when you look at the dollar versus a lot of those other major currencies right now, you're getting paid a higher interest rate on your investment in the dollar than you are those other currencies. And if you now see a breakout of that 95 level, you should see some price appreciation going into those levels.
I agree. I mean, you have to respect the breakout, number one. You have to respect the ability for the dollar to run. And from the technical perspective, Matt, that usually tells you everything you need to know about the fundamentals right now. Weakening other currencies, the dollar's been a safe haven, and it might be that safe bastion over the gold. Maybe the reason the gold is going down is because of the dollar going up. That inverse relationship is pretty historically built in. Let's look at the last one we always do, which is Bitcoin. And, Bitcoin, what can you say about the cryptocurrencies? They got crushed about 7 days ago. Over
Yep.
the weekend, they had some hack in South Korea. And, tracking Bitcoin the way you and I do, we know the Asian markets, they trade a lot of Bitcoin, they hold a lot of Bitcoin. So a hack in South Korea is major.
Especially in South Korea.
Yeah. Yeah, there's no question about it. But you got a triple bottom forming here. This 6K level, we've been calling it support for a long time, Matt. If you were ever just going to look at a chart and say, hey, I'm waiting for support, you're here now, but not necessarily a buying signal. You don't have any strength on that chart yet. Talk about when a stock is at the bottom of a chart or a product or commodity or whatever the heck this is. I do know that was it the SEC or the CFTC or some body came out and said that Bitcoin or Ethereum, I should say, is not a security. So that's a good thing. It's commodity, and they had a little bit of a bounce from that. Is there anything good to be taken from this chart?
No. If somebody was bullish on Bitcoin, they've been bullish on Bitcoin for the last 4 years, and they've been a holder, and they're looking at that 6,000 to 6,500 level, and they're seeing slowing momentum at that level, and they're like, oh, this is an opportunity to buy. I'd say do it with your money. I honestly do not know what would have to happen for me to buy Bitcoin right now. I'm not buying at 6,000. I'm not buying at 67.35. I'm not buying at 7,000. I'm not buying at 8,000. I'm not buying at 9,000. I'm not buying at 10,000. But I might buy a breakout of 10,000. But that would, many, many things would have to go to transpire. Maybe at some point in the future, if Bitcoin breaks that $6,000 level, gets down to the price point where it's like, yeah, let's go take that shot in the dark. Let's go stab it a little bit. Maybe at that point, but I'm certainly not buying simply because the last week after it got crushed from the South Korean hack that, oh yeah, slowing momentum over the last 5 days up and down 6,000. That doesn't give me a reason. Now that doesn't mean that Bitcoin is not going to drive up in price off this bounce of 6,000, 6,500. It certainly could. It did it last time. It drove from 6,500 all the way back into 10,000 almost. I think it was like 9,800. The time before, after it was getting crushed when it got introduced into the futures market back here in February, it immediately rose right back in value to about 12,000. So you do have some historical data that suggests that you might see something like that happen. And with this slowing momentum down here after the gap, I could see somebody making that argument, and there's certainly some logic to that argument. There's no doubt about that. But
Hmm.
I just see so much negativity around Bitcoin right now. I see I
Oh,
see
it's
so
every
many
day. It's
hurdles,
relentless, by
right?
the way. I mean,
Yeah,
if you
it's
track
everywhere.
Bitcoin news, eventually you're going to see an article where some governor from the Bank of International Settlements talks
Said
about
it.
how it's just,
Yeah.
garbage. Basically it's garbage. It's garbage. Every major banker institution, they all come out and voice concern about it, Matt. And there's a lot of people short Bitcoin and cryptos right now. I think that when the market created that ability to short, it obviously is making a market. From a long term perspective, if you truly believe in the fundamentals of Bitcoin, it's probably a good thing for Bitcoin. Obviously, I
Hmm.
read some very troubling reports, which did not shock me at all. Last year's big run up was a lot of price manipulation, spoofing and fixing, and all that
Oh,
kind of
really?
stuff.
Really?
Um,
Spoofing exists?
C'est la vie. I mean,
Yeah.
listen, you got to learn to trade what you see. You got to build enough experience in the markets to understand what's happening in front
Well,
of you.
Tim, how many times did we warn people of that last year?
Oh, yeah.
As Bitcoin was being driven up to all-time highs, and people were like, "Oh, this is going to 100,000. This is going to 500,000. We're all going to get rich and never use dollars again." And the Facebook warriors came out, and all that jazz. And basically, you and I are like, "Guys, there's something fundamentally wrong here.
Mm-hmm.
There's something that inherently is wrong. Assets don't do this if they're legit. They just don't. It cannot be sustained. Let's wait till it can be sustained." And I think that's what we're kind of waiting for. I mean, I'm not anti-Bitcoin. By no means am I anti-Bitcoin. I'm not anti-crypto. Well, I am anti the vast majority of cryptos and ICOs and all of that, but I'm not anti-Bitcoin or Ethereum or Litecoin or Ripple or those top 10 cryptos out there. And I still believe in the blockchain technology, no doubt about it. I think it's the wave of the future. But that doesn't mean Bitcoin has to be that gold standard to the next crypto wave. And so I just feel like there's always going to be some manipulation, and especially when it gets into the financial markets, where Wall Street even has more ability to manipulate price and spoof the market and place stop orders for fractions of milliseconds just to drive price down. So, it's once you start understanding how Wall Street manipulates and controls price action, you start understanding that the Facebook warriors are going to be wrong. So that doesn't surprise me. But again, it doesn't change the fact that the only thing important here is not what you think, and it's certainly not what I think. It's what we see on the chart.